It's crazy how this OB strategy can earn you $1,700 in 17 hours. Now let's start off with, what is the story? You got to ask yourself, where am I at? Where's the market at? What is your bias? That's what you ultimately have to ask yourself right now. So I would start off on the higher time frame, right? So this is a little bit of an example of how the market may look like if it's, let's say, bullish, right? We established that it's bullish. Now we also established that it's a break of structure. Why? I'm just going to go ahead and mark it out. So that is the valid break of structure, right? We have engulfing candlesticks, right? It's breaking with a solid candle. Now that's going to help us start determining where is going to be the highest probable OB. That's where we're trying to put all of our focus at right now. So on our screen, we have 3 possible OBs, order blocks, POIs, whatever you want to call it. Now, this is what we see in our day-to-day market, right? Now, let's start highlighting the different possibilities that, how the market can react to each one of these OBs. Because what we have to figure out is which OB is valid and not valid, right? And based off of the probability, how they would react off of each other. Because all 3 of them in this particular case, let's just say they're actually there and they have a reaction, right? And if you clearly see out of the 3 OBs, the only one that has a break of structure is the one in the middle. So now that we have an understanding that an OB only is valid when it creates a break of structure and you grab the last candlestick, right? That's all you need to know about OBs. That's what makes it valid. The other 2 are no longer valid because they do not have their own break of structure, and obviously they may seem similar. However, there is 3 points you need to know. 1, needs to create a break of structure. Like I said previously, needs to, number 2, have a engulfing candlestick to the upside, downside, whichever the case may be, right? And number 3, it has to be the last group of candlesticks before that initial move that creates engulfing candlesticks and that next move break of structure. If you have all 3 of those, that's where you will find your valid and highest probability OB. Now let's look at an OB that I'm sure a lot of people here are also looking. There's always going to be buyers and sellers in the market. So as of this moment, we only have one actual break of structure, right? That is known. So let's go ahead and just mark out an OB, or at least some people may call it a supply. But let's just look at it like this. I'm sure a lot of people see those 3 consecutive candlesticks going to the downside. That initiates a lot of people to have this mindset that there's an OB there. But technically, an OB can't be present there because it didn't break structure to the downside. And even that little bit of structure we have here is not even really considered what's called a swing point, because you really look at this here, the only break structure we have initially is this one on the left side. Now, I'm sure a lot of people look at it as like, oh, well, I'll just wait for that to break, right, on the, let's say, the higher low. But technically, that isn't even in a higher low because it didn't break structure to the upside. Yeah, we have a little wick. Let me just go ahead and mark it out for you guys. But a lot of people are probably looking at it as like, oh, well, there's also an OB there. Well, there's not necessarily an OB because it did not break structure to the upside. And since it didn't break structure to the downside, both of these OBs are not valid. You shouldn't even be looking at those. At that point, that's where you're going to be running into a situation where you're going to be taking that trade and seeing it hit your stop loss before you even, let's say, even hit TP1. The only valid point of structure here is this lower point, this lower, higher, low here. And other than that, there's no structure that we can necessarily use to help us, let's say, change our bias from, let's say, right now it's bullish to, let's say, switching our bias to bearish. The only real thing we can see is liquidity. We have liquidity on both sides here. I like to highlight the entire section there because how I'm viewing it is, it's literally, how I said from the get-go that a lot of these strategies just have different terminology, but all strained from Wyckoff. theory, right? So ideally how I'm viewing this is there's liquidity resting below and above this bit of structure here, right? And then we have an OB resting below it. So the biggest thing is, right, we already understand the story, our bias, what's a valid OB, and obviously which side of the market are we on, right? We have all of that set in stone. Beautiful. Now, we understand where liquidity is. That's beautiful. Now, liquidity always follows two steps. Sweeps, generates, sweeps, generates. So it's going to do the same thing. So I'm hoping for kind of a reaction kind of similar to this. Doesn't necessarily have to be in this order, but I rather it in this order simply because it sweeps to the upside first. So it's creating less resistance for our buy setup, right? And if you notice in our previous clip that I think I released it on my TikTok, I was highlighting different points of liquidity. So the equal highs was swept, beautiful. And the equal lows then gets targeted, gets swept into our OB that we're actually looking for a trade, right? And if you look at it, both of those OBs that we highlighted previously, they're not valid from the previous rules that I already spoke about. So this is ideally the kind of setup you want to find, because ultimately what's happening here? Generated liquidity, sweeping liquidity. Now with all that happening, right, liquidity is now being generated as it pulls into the market. So let's go ahead, hop onto the live charts. So right now we're in the 4-hour time frame. That's how we're going to start this thing. Same thing how we are evaluating it on those drawings previously. First thing I want to highlight is the clear as day break of structure. That is going to help us determine where we at, right? Where is the bias, right? And we're identifying liquidity as we speak. So these two liquidity points that's resting above and below, that is where the market then pulls out, sweeps both sides. Beautiful. Like I said, it doesn't have to happen in the order that I previously discussed in those drawings, as long as it does happen. So let's go ahead and hop into the 5-minute time frame, right? I know there's a previous point there that probably was an entry. I mean, probably really could see. I mean, it's kind of visible. Yeah, it's really visible. There's an entry there. But let's just go ahead and hop into the most recent entry model that happened here. First thing I want to mark out is the break of structures, right? The break of structure to the downside and then a break of structure to the upside. With understanding that simplistic way of looking at the market, you already did half the work. Now you're just looking for the market to make a pullback, and I only drag it to the side because really I'm just cutting half of the work, because a lot of the time people will use the fib and wait for it to pull back into 50. If it pulls back to the point of where it broke structure, then 9 times out of 10 you hit that 50, right? So you already just, helped clear up the charts, I guess is the best way of putting it. So I'm going to go ahead and point out that, look, it broke structure to the upside. It's beautiful. We already see that clear as day. So at that point, I like to just grab a group of these candlesticks, right? We found our OB. It broke structure. It was dominant. It showed everything that we're looking for here. Don't mind me. I like to, kind of keep myself organized is the best way of putting it. You guys do not have to do that. I just tend to do that a lot of the time. So now we're going to go ahead and hop into a 1-minute time frame. I'm just going to drag this to the side just so I can make a point here that, look, we got everything we're looking for. Now we're just going to be looking for another OB on the lower time frame. Exact same way. I mean, this is clear as day. It tapped into our higher time frame. Well, you could say mid time frame OB, right? Plays into it, beautiful, right? Highlight it, beautiful, right? And not only that, let's also look at the kind of structure that formed on the way as it blew up to the upside. It's great to understand that there was a failed OB, because that's just helping you see that, okay, this OB is actually more valid, because you're seeing the ones that are not valid, right? And obviously that break of structure is a big thing, but let's go ahead and highlight the liquidity. So we have liquidity on the upside, we have liquidity on the downside, right? We have liquidity on the upside, and as it plays through, what does it do? It generates more liquidity. So as it swept to the downside and swept back to the upside, it's doing what? It's sweeping liquidity on both sides. And what is liquidity doing? As it generates, it sweeps and generates and sweeps. It will constantly do that cycle over and over and over again. Now, how you use that and implement it while finding these PYOBs, right? The highest probability OB, that's where you're going to find your ideal setup. Now, after highlighting that breaker structure, I would just highlight the whole group of candlesticks, because that's what I tend to do, especially when we're on the lower time frame like this. Why go so anal and so, down to one candlestick? All you're going to do is really mess up your stop loss. Now, in this last portion, it's not really a need, but you could mark out a OB that failed to a certain degree. So we have an OB that somewhat failed here, and honestly what happened here is it just got wicked out. That's all it is. Excuse me, I messed up on that. So yeah, so it's a failure OB. I would just mark it out as, okay, that didn't happen, it wicked it out. So you can look at that as it's liquidity that was swept, right? It was swept and it generated new liquidity for us to target. So that's where I would enter my trade. And give yourself some space, and I'm not saying just to give yourself a bigger stop loss just because you want it to breathe necessarily, but I don't know which broker you guys are on, or if you're trading futures or Forex, but I would highly suggest always give yourself a little bit of space. You don't know the kind of spread that you'll be dealing with, or if there's going to be a ginormous wick like how it literally happened a couple candles next. And yeah, so that's a 1 to 7, and I think it was like 18 hours or something like that. Let me just double check. So yeah, about 17 hours. So like I said, guys, if you're looking to find setups like this, I think this video details everything needed. And if you have any questions, you're more than welcome to reach out to me. And as always, stay profitable.